Hi guys, in this video I'll talk through how my investment portfolio outperformed the NASDAQ and the S&P 500 again this month. I'll also discuss the volatility that we've seen in the markets in the last couple of weeks and how the portfolio has proved to be robust in the face of that volatility. I'll also talk through the top performers in the portfolio for the month just gone and cover off the technical entry points for the new trades we've added to the portfolio in the last week. Hi guys, hope everyone's safe and well. Please remember that the contents of this video are not intended as financial advice. These are my opinions only. So as I mentioned, the portfolio has outperformed the S&P 500 and the NASDAQ again this month. We've had a fairly strong start to the year, as I've mentioned. Just to give some sort of stats to the performance of what I'm talking about. So the NASDAQ, so this is the S&P 500. S&P 500 this month just gone has returned 2.61%. Obviously this week it's been quite a volatile week, down 2.45%. The NASDAQ, if we take a quick look at that, how that finished up for the month. So that finished up down, just up 0.93%, so just under 1%. So if we switch to my stats, just to give you an idea on where we're at. Unfortunately, I'm still waiting for the Etoro stats to update, but it will show a slight reduction yesterday. I think I was down about 2.5% or 2.15% on the portfolio. So we would have finished up the month around about 4% up and around about 13% up for the year. So NASDAQ finished the month up about 1%. And S&P 500 was about 3%. So we've beaten both of the indices again. That's twice this month, twice this year. Apologies. So we're doing really well. Obviously, it's been a very tricky couple of weeks. There's been a lot of volatility in the markets. Before we saw that volatility, the portfolio was actually up almost 20%, I think, for the year. So we were doing really well. But you know, as I mentioned in a couple of my recent videos, stocks don't always just go up. So we've been expecting some sort of a pullback. Just to understand a little bit why the portfolio, done so well to start with. If I just jump into the portfolio. So we've early on in February, first couple of weeks, a lot of our Chinese or US listed Chinese stocks done particularly well. So that's the NEOs, the Q finances, so 360 finances, Quodian. A lot of those stocks surged ahead at the early part of February, up to mid-February. As there was a lot of optimism in the markets and people were taking a very risk-on approach. So a lot of people were investing in Chinese stocks, fintech, you know, a lot of the growth companies or the potential growth companies. So there was a lot of buoyancy in the market, a lot of optimism. And then over the last week, or a couple of weeks, you've seen a lot of pullbacks, a lot of people, a lot more sort of fear entering the market. And there's a few reasons why this could be. But essentially no one knows. So, you know, I'll cover off some of the reasons why it could be. So a lot of people have been mentioning that it could be due to fears of inflation. Bond yields have been rising, which normally points to an indicator that inflation could be on the way up. Inflation would hit growth stocks. I'm not going to jump into detail too much about why that is. There's a lot of great posts on Etoro on explaining inflation and how that impacts the economy and impacts growth stocks. So I won't jump into that, but that's one rationale. There's also the rationale that it could be part of an ongoing rotation from the technology stocks, from the growth stocks that we've seen have great gains over the last 12 months into the more, the cyclical stocks, the stocks that have potentially been beaten down because of COVID. So, you know, we're looking at the aviation, hospitality, these sort of sectors. So it could be rotation out of the, you know, people taking profits out of these huge gains that they've seen in the technology sector or the growth stocks, and now starting to rotate into more cyclical stocks. It could just be as well end of the month profit taking. So you will see end of the month profit taking 9 times out of 10. So I think it could be those. It could be all three. Could be inflation, could be the rotation, it could be profit taking, it could be a culmination of the three. So no one really knows. But what I like to see this month was that the portfolio held up very well. It proved itself quite robust. We're well diversified. I posted a video last week on market crashes and corrections and how we sort of mitigate the risk of these happening. And it's proven to be the case this month. Like I said, we've beaten the S&P and the NASDAQ again in what has been a very volatile couple of weeks. So the portfolio is looking pretty strong. I have taken some cash, so I have to close out some profits this week to have some cash in hand, which will help us to take some opportunities which we can see are starting to appear, I would think, over the next 2 to 3 weeks. So even though there has been a lot of volatility, there's been a lot of news, a lot of people have tried to explain why there's been a lot of pullbacks over the last couple of weeks. Like I said, the treasury yields, inflation fears, the rotation into cyclical stocks. But for me, I don't think we're quite in correction territory yet. Correction on the major indices you'd normally see is about sort of 10%. But I don't think we're quite there yet. If I quickly have a look at the NASDAQ, just to give you an idea on what I'm sort of seeing. So, we've been in a fairly consistent uptrend since mid-2010. This is the weekly chart. Fairly consistent uptrend. So as you can see, we've been following this trend fairly well. And then obviously last March, you saw the huge sell-off when COVID hit, and it's bounced hugely off of that since then. We've been on a massive tear since sort of last March. So, we could be due a correction. We've seen a pullback. I mean, I'd class this as a pullback. So you've got the bearish engulfing candle at the top there, and you've got a huge drop off. I'd like to see what happens around this support area. So we're looking around about the 12,500 mark, just to see what sort of reaction we get there. I mean, it could be that this sort of bounces back off and heads further up. But I mean, if you look how far away we are now from the long-standing trend line, it's starting to get detached from valuations, really, from where we should be or where it should be. And you tend to find over time things do revert to the mean. So I'm not saying that we're going to all of a sudden crash down and there's going to be a big stock market crash and the NASDAQ's going to fall through the floor. But I'll be interested to see how we react around this support area here over the next sort of month to 2 months. It could be, like I said, that this starts tying in with the rotation into cyclical stocks. So people start taking profits out of the technology sector, which is what the NASDAQ is primarily made up of, and start putting those into maybe some of the S&P, the Dow Jones stocks. So if we do break here, this could maybe just start to drift further lower down to the 10,000. I'm not one for making predictions. If I could, if I knew exactly where it's going, I'd be an absolutely multi-billionaire. So it's only what I'm observing. This is the sort of sentiment I'm seeing in the market. So we'll see how we go with this. But just sort of going back to our portfolio, I'll cover off the closed trades in a moment. But we've got some exposure to some technology stocks, but we've also got some exposure to some of the cyclical stocks as well, and also some of the beaten down COVID stocks. So we're quite well diversified, which is why I think has helped us sort of perform so well over the last couple of months, even though we have seen a lot of volatility. I do think as well, when it comes to the volatility, because there's so many new traders entering the market, there's the sites like Etoro, like Robinhood, that allow for free commission stock trading or stock investing, as they're classing it. You got so many new people in the market, and since beginning of or end of March, beginning of April last year, most of these people have only known stocks to be going up. So this could be the first time that they're over the last week or two that they're starting to see pullbacks, and they're not too sure how to play it. So expect to see volatility continue over the next months ahead, really, which is good for us because it presents a lot of opportunities. I mentioned there that the NASDAQ and the technology stocks might have a pullback, but also that presents great opportunities to get into companies that have got good long-term potential. So we'll be looking at taking those opportunities up, which is why I've freed up some cash. Quickly just show you what we're sitting on at the moment. So yes, we've got just under 10% in cash. I'd like to probably have more like 15-20%, but 10% is okay for now. So we'll see how we get on over the next week or two. We may increase that cash position slightly. We've got a lot of positions that we can take profit off the table if we need to, so that's not a problem. I'll just quickly cover off the closed trades for the month. So we've got 17 closed trades for the month, which gives us a return of an actual realized profit of 3.11%, which is nice. 88% of those trades were profitable, so quite a lot. The top performers over the month were YG. I always say these ones wrong. YG Power, which was 47% return. That one was bouncing off of a trend line. This was covered in one of our videos a couple of weeks ago. It was nicely bouncing off a trend line and had a really nice upward trajectory. Cashed out on that one as it hit a bit of resistance. So that was a nice sort of 47% return. And then another one of the stocks we have, I think that one was Zhong'an Online Insurance. That was a Chinese stock. We took 34% profit on that. And then another Chinese stock, which was Tencent. So like I said, early on in February, a lot of the Chinese stocks done really well. So we did take some profits on those as they started to pull back slightly. So I'll just quickly cover off the trades we've opened this week. So we've only opened 3 trades so far this week. The first one is Palantir, which is a software application company that creates and builds data analysis tools for corporations. It's recently IPO'd, only IPO'd last year. So it's been one I've been keeping my eye on, because I think it's got quite a good future. But the prices that it initially IPO'd at were too high for my liking. So I think the lock-in period for initial investors actually expired last week or the week before. So you can see this sort of coinciding with a bit of a sell-off. And we've basically jumped in. Again, it's not too much chart and data to work with here because it's such a recent. I just realised that line's wonky. It's not good representation. Yeah, it's one that we've had our eye on, but we wanted to wait for prices to adjust basically. So we have seen a bit of a fallback. If I jump into the daily charts, and I'll just show you what I am seeing. So if we zoom out slightly, so you can see it's sort of made an area of support just around about the $22 mark. So it's touched this a few times, and you see the bullish engulfing candle there. It's hit up here, and then this is where we've basically taken a position. So you've got like a hammer candle essentially. So it's hit a similar area of support around about 23. It's touched the bottom there, touched 20 around about 23, and then closed up here, closed higher. So I think it closed on about 23.9, which is where we took a position. So this one, I think this one's going to be a bit of a long-term play. I think this has got a great future. There's a lot of people investing in this. A lot of big hedge funds. I think ARK Investment have added it to their portfolio. So Cathy Wood obviously sees some potential into it, and she's been making some great calls over the last couple of years. So it's always nice, a nice back in. But yeah, so that's one of the stocks we've got a position open in. The next one is Sarepta Therapeutics. This is a biopharmaceutical company that specializes in precision genetic medicine. So there's a couple of really good videos on this one actually, covering it in more detail and what it offers. So I'm not going to jump into that, but from a technical perspective, what I will do is I'll just show you what I'm looking at. So let's just zoom out a little bit. So long term, it looks like it's been sort of bouncing around and when I say long term, it's actually only the last year, but it looks like it's been hitting a fairly sort of consistent band. And basically this big sell-off, this massive gap down here, sorry, just to confirm we're on the daily charts here. Yeah, this massive gap down here is actually when they didn't receive FDA approval on a particular type of research or medicine that they were working on. So it sort of fell through the floor. But just yesterday, this was Friday just gone, it did have some positive FDA news, which has basically helped it build a bit of a base at the bottom here. So you can see again there's a strong bullish hammer. You've got another bullish hammer there. So there's really sort of promising expectations for this stock, and it's going to be one that we're probably going to have to hold for a while. But it could, we could be seeing this move quite consistently higher. If I show you what it looks like on the weekly chart. So this was the big sell-off. As you can see, huge sell-off, but then it's now created a new low and closed on the high around that support area. So we could be seeing this push back up to these sort of levels, which would be obviously brilliant. So 175, and it's currently knocking around about 80. So yeah, that'd be quite a nice return. Again, a bit of a long-term play, but there's promising signs for this one. So that's why we opened a position in that. And then the last position of the week was in Covivio, which is a European real estate investment trust. I think this is the fourth largest fourth largest REIT in Europe by assets. So it's a big player, owns a lot of property, owns a lot of buildings, a lot of hotels. And as you can see, again, this one has been following a trend quite closely since 2019. And then last year, like most of the REITs and sort of COVID beaten down stocks, it had a massive sell-off, but it's now just slowly been stepping its way back up, which has been of interest to me because it's been quite consistent. So you've sort of got this channel forming here, which has been touching and bouncing off of. There's also what could be a double bottom forming here. So we've basically opened a position on this bullish engulfing candle here, which looks like it could be on a channel support. So we could be seeing this one head back up to at least the sort of 90 area. And then if it breaks back above that, we could then just see it follow this trend line again. So took a small position in that, 1.5% of the portfolio, so not a huge risk, but another sort of recovery stock, I guess you'd call it, which we're starting to build more of into the portfolio as we see economies recover and vaccines roll out. I think we're going to start to see these do well. So that's the open trades for the week. So we've only got 3. I've covered off the closed trades. So I guess there's one more thing I wanted to cover off really, which was obviously this week there was a lot of problems on the Etoro platform. They had a lot of issues with people executing trades. Obviously there was the outage as well, which was down from, I think it was like 3 p.m. in the afternoon UK time until 8 a.m. the next morning, which obviously for a brokerage isn't great when people need to be making and closing trades. So it's not been great, but they've had unbelievable growth over the last sort of 12 to 18 months. So they're obviously struggling to keep up with demand. So they have actually released some new information and some changes to the way that the copier platform works, the copier part of the platform works. I did put it in a recent post on Friday, but essentially the minimum amount that you can copy a popular investor with now is $500. So this used to be $250. So it has pushed that up, which is for me slightly frustrating because I was a copier once back in the day. I've been on the platform since about 2014. So I didn't have a lot of equity to start with. I put a small amount of money in and started copying people. So to push that that sort of barrier up to $500 does seem a bit harsh for those maybe just sort of feeling their way into trading and investing. But you know, one of the reasons they've done it is essentially to allow their systems to cope with the number of orders that are being executed, and that sort of links into the second point, which is the minimum position size for any position in your portfolio must be $2. Previously, that was $1. So what that means is whenever my copiers, or whenever I open a trade and my copiers open a trade through the copy portfolio, it's opened at a percentage of the equity that I've got in. So I've run through all of the people that are copying me and done some tests on how that would affect, or how these changes would affect my copiers, and happily that's not anything that they need to worry about, because I open positions with 1 to 1.5% of my portfolio. It should mean that those currently copying won't need to make any changes, which is promising. But it does mean that any new copiers that want to copy me will need to copy with a minimum of $500. But that will capture all of my trades, which is good. It's unclear yet as to whether these measures are going to be short term or long term, but we'll see. I guess they need to sort of scale up their infrastructure, scale up their processes and operations, and be able to cope with the huge demand they've seen. I think I read somewhere that they've had something like 4 million new user accounts in the last 3 or 4 months. So, you know, there's been a huge demand for people on the platform, and the infrastructure just not been able to cope with it. So hopefully this is only temporary. The limits sort of drop back again, so it enables the average person to put some money in. Also, sorry, one other thing. The minimum amount you can deposit is now $1,000. So that's obviously quite a big jump as well. So hopefully that's a temporary thing, and then we'll be back to normal, you know, as soon as possible. So that's the portfolio rundown for February. Again, really pleased to have beaten the NASDAQ and the S&P. We're moving in the right direction, compounding our returns each month. We're gaining some new copiers as well, now up to 10 copiers. The aim, ideally for the end of the year, is to get to 50. If you'd like to copy me, you can do so by going to my Etoro profile page. There's a link in the description, and you can copy my open trades from there. If you have any questions on that, obviously feel free to drop me a message either on the chat or on the comment section on the YouTube video. If you wanted to just stay up to date with my thoughts on the market and my weekly videos, then obviously you can subscribe to my YouTube channel. Again, if there's anything that you want to discuss, or if you think that there's anything that I could improve on in the videos, or you'd like to know more of, then drop a message in the comment section, and I'd be happy to